Between this call or the second step, the consultation that we just finished wrapped up here, we also want to talk about funding. I always, recommend speaking with a funding company directly. You have your financials together. We work with a company, both Benetrends or FranFund are two companies we work with, and they'll do a free, no cost analysis. There's no hard credit check. Usually it's a soft check to see kind of what you qualify for. They'll go through options like SBA, government backed loans. Believe it or not, there are some brands out there that, once approved by the SBA, will offer 100% financing. Not common, but there are a handful of brands that will do that. Typically, 20 to 30% is what you're looking to put down. Just say an average service-based brand is 150 to 200,000 all in, which is essentially the 90 days of operation, working capital, franchise fee, and all the costs involved to get the business up and running and to run for 3 months. We'll round it up, just say 200,000. You're looking at about 20 to 30%. So 40 to 60,000, and that 40 to 60,000 would be the down payment, and then the rest would be financed via the SBA. The use of retirement assets, this Rob's plan, rollover business startup, and those plans get to utilize previous employers' 401k, an old traditional IRA, not a Roth IRA. If all your money's with your current employer, those funds will become qualified after leaving the employer. So something to think about as well. Some people use a combination of a retirement rollover and an SBA loan, and Benetrends or FranFund will be able to walk you through the process. Kind of like when you're buying a home, want to make sure that everything is in line, that you're qualified and looking at brands that you qualify for financially. But just because you qualify for up to 500,000, your comfort level may only be 200,000. So getting clear on, what you qualify for and then what you're comfortable with are two different things. But knowing, these are the rates, these are going to be my payments. So going back to the, 100% financing, that's great. Maybe it's no money down, but it's going to inflate your monthly payments. So you need to be aware. And when putting together your pro forma, you're going to have that service to debt, what that monthly payment is. And the SBA will offer variable rates. So you want to factor in, okay, if rates go up or down, maybe adding a separate line item there in the event rates go up a half a point or down half a point or a quarter point or whatever it is. How will that affect my bottom line as well as my payments? So yeah, so that's really the second stage. Benetrends will also, or FranFund will go through home equity lines of credit. That may be an option. They may not offer it directly, but recommend speaking with the bank or your mortgage lender. There are options where you would work with your financial advisor and take a loan on your investments without having to sell them and incur commissions and capital gain and things like that. So you can take a loan on your money, keeping in mind you want to avoid and be aware of margin calls depending on what your investments are in. But these are typically for non-retirement investment accounts, and they spend a lot of time. You're looking to invest a couple calls, an hour or so. You'll get your credit, what you qualify for, all the options, and it may be a combination. But just like buying a home, you want to be very clear on what you can afford, because that alone may rule out certain brands or brick and mortar if the maximum loan is under a couple $100,000. So those are things, and we're building here, right? This is a process, and this is really the order to do it. And because this way, by getting selective, knowing your comfort level, what you qualify for financially, what the ideal business looks.
Your model is built, your funding is lined up. Now it's time for the exciting part. In the final segment, Giuseppe reveals exactly how brand introductions work, what to look for during due diligence, the one question you must ask every existing franchisee, and how Discovery Day can make or break your decision.